Bitcoin is sitting near $64,589. That sounds calm, but do not confuse a pause in price with a repair in market structure. Long-term holder MVRV zscore is still negative 0.85 inside its lower valuation band. The long-term investor base is still carrying stress. Start here. Long-term holder MVRV compares market value with the realized value held by the oldest, most patient cohort. The z-score tells us whether that valuation gap is stretched relative to its own history. Negative does not mean every long-term holder is underwater. It means this cohort's valuation structure is unusually compressed. Look left. At the 2018 and 2022 lows, this metric fell closer to minus 1.4. This year it reached minus 0.97 in late June, then recovered modestly to negative 0.85. So this is not the absolute historical extreme, but it is firmly a lower valuation zone, and that is exactly why it matters. Now switch to long-term holder AVIV z-score. AVIV looks at activity-adjusted value relative to investor value. The simple intuition is that it filters the market through the capital actually carried by investors, while giving more weight to economic activity. Right now it reads negative 0.72. That is very close to the minus 0.8 stress band. Again, the history is useful for scale, not for making promises. In 2018 and 2022, long-term holder AVIV fell below minus 1.2. This year, the low was minus 0.84. The latest reading is negative 0.72. That tells us the market has entered real valuation pressure, but it has not yet shown the same depth of capitulation seen at the most violent cycle lows. The third chart is RHODL. It compares the value held by younger, faster-moving coins with the value held by older supply. Think of it as a temperature check on fast money versus patient money. The ratio is only 0.087. That is low. It says the market is not being driven by a large wave of new speculative capital chasing price higher. At the 2018 and 2022 cycle lows, RHODL fell even lower, near 0.04 and 0.02. The current low this year was 0.07. So the cohort structure is defensive and old coin heavy, but not as extreme as the final historical washouts. Low RHODL reduces euphoria risk. It does not remove downside risk. Put the three gauges together. Long-term holder MVRV is at negative 0.85. Long-term holder AVIV is at negative 0.72. RHODL is at 0.087. One gauge says valuation is compressed. The second says investor value pressure is still close to the lower band. The third says fast money is absent and older coins dominate. That is a defensive structure, not a euphoric one. For this week's read, I would keep it simple. A repair means these valuation scores begin to climb out of the lower zone while price can hold above the recent low. A deeper stress phase means price weakens again. These two long-term holder scores revisit their June lows, and RHODL stays suppressed. Neither path needs a dramatic narrative. The data will show which one is happening. Here is the weekly conclusion. Bitcoin is no longer showing a normal, high-risk, fast money structure. The long-term holder data has moved into valuation stress, and old coins still dominate the supply picture. But the deepest historical capitulation readings have not fully appeared. That is the useful judgment. The bottoming process may be forming, but the repair has not earned confirmation yet. Public data research only, not investment advice.